Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Ajay Sharma as well as Aisha Faridi. And for now, the market continues to trade in the red after that monetary policy outcome wherein there was no liquidity surprise or liquidity expectation that the banks had. There was a bit of slip in the market, and from there we haven't seen any recovery. The Nifty is in fact threatening to go below the mark of 21,700, and the Bank Nifty too has seen quite a bit of pressure today. Of course, it's the private banking names, the likes of ICICI Bank, which is putting a lot of pressure on the markets right now. So ICICI Bank is one of the key drags. ITC is not supporting the bulls today on account of that possibility and the news coming in that BAT is looking at offloading some of their stake in that company. Axis Bank, HDFC Bank are some of the other key drags. On the gaining side, however, it's SBI that is powering ahead. So again, the PSU is coming to the rescue, and Power Grid is the other one which is reacting to earnings. From the broader market, don't forget the insurance companies, especially the New India Assurance and GICs of the world. They are high by 10 to 11%. Paradeep Phosphates on account of that acquisition is riding high. You also have Cummins India, Kalyan Jewellers, Trent, which continues to gain ground after that 20% uptick yesterday. And LIC ahead of its earnings are definitely excited. So, Ajay, Aisha, again, we have a very vibrant market at our hand. While the index is a bit subdued, it is the broader market which is very vibrant.
There's so much happening on individual ideas that even if you can actually ignore the index for some time till it gets a direction.
Or banks.
Banks in particular, you know, at the time of the RBI policy, mid policy, at one point in time, SBI was getting 7% in trade. Some would say GQG effect, which we talked about earlier in the show. But the moment 70-80% of the speech was over, I mean, there was no clear mention of any liquidity injection, either in the form of CRR or any other tool. Suddenly banks just came off, and since then have not really recovered. So, you know, we spoke to a host of guys after that. So expectation was running that there will be liquidity injection or issue of liquidity, but RBI believes it's a seasonality factor. By Q4, the government spending will slow down, and automatically, because of seasonal factors, liquidity come. And since then, there's not been any recovery in the Nifty. And then, of course, the big ITC one cracking big time, 5% in trade.
Yeah, absolutely. I can see red ticks on a Britannia, on a Nestle, ITC down 2.5%. Look at Axis, that's getting clobbered today, 3.25% of a shave off. ICICI Bank is now headed in for a 3% decline. And remember, these stocks have a meaningful bearing on the Nifty as well. Kotak is down 2.6%. M&M is down 2.5%. It's the entire rate-sensitive chunk which is at the bottom of the heap right now. And today, autos as well are not resurrecting. Not just M&M, but Maruti as well is down about 2%. And then, of course, there are big boys like L&T as well, which are under pressure right now. Having said that, even though SBI is off from the day's top, it's still holding good by almost 5%. OMCs, the flare in oil continues. So 4.5% is the traction that you're seeing once again on that stock. Ajay was highlighting individual stocks. Look at HAL. That's up nearly 6% in trade. And remember, these are stocks which have already had a fabulous run all through last 52 weeks, not just this month or so. Trent was what, double digits yesterday? It's another 7%
In fact,
today.
Jeffries came out with a brilliant report that we
got
it
completely wrong.
I mean, I have not seen an institutional brokerage like that, you know, admitting on public platform that they got it wrong. But it's very good actually. It's a great practice. Many other brokerages should also follow.
I hope they do. Yeah, absolutely.
It's a great practice. I mean, you're not expected to get it right all the time.
100% of the time, yeah.
And it's a good one. And they reversed their call. And yesterday, there was a lot of buying which came in after the results and after 5 to 7 minutes of results, like analyzed buying.
It wasn't like one tick. It was in a staggered
Analyzed.
manner.
Gradual.
And today, that leftover buying is being seen in an overall weak market. Trend is laughing in the face of people who called it expensive.
It is expensive. Let's be honest about that. That's a fact. It's over 70 times in terms of forward earnings as well.
We've had experts come in and say that, you know what, we can't say anything about valuations. It's a great company, but can't say it.
It is what it is.
So you should caveat it by saying that on PE terms it appears. Because there are people who say that PE sometimes doesn't capture fully the valuation point. But let's take it forward with Kunal and Nuresh also. Kunal, you know, the market has not come back to the opening highs it made in the first. Kunal and Nuresh, afternoon to both of you. Nuresh is looking upset I didn't address him. No, I'll come to you on the Bank Nifty front.
Or he didn't buy Trent enough. You never know.
Kunal, what about the Nifty today? The highest point actually got made in the first 30 minutes of trade. Look at the Nifty intraday. Are we going lower or should we cover? Talk about Nifty first. Or should we cover the short position if I am already short? Okay. Nuresh, to you first. The same question.
So, in terms of Nifty, we are getting into a problem due to some heavyweight. So, if you look at it, we are looking at the banking side, but one of the largest impact today on the Nifty is from ITC. So, 40-pointer impact from ITC and a 40-pointer impact from ICICI Bank. So, the problem is in the Nifty, we are getting into a range closer to 21,600. You want to be actually buying the dip rather than selling at current levels. So, cover the shorts for now and wait it out. Bank Nifty has given a breakdown, so that's a problem area because, and then you're seeing a very divergent move. You have SBI, which is up 4-5%, and you have the whole private banking space, which is down 2-3%. So in this flux, you add to it the mid cap index is flat, the small cap index is flat. Even the Nifty 500 is not taking a hit. So we are stuck in this range. At the same time, globally, we are hitting all-time high. So time to be more stock specific unless we start seeing a turnaround globally as well.
Before that, I just want to address this flash is coming up on your screen. There were certain small blocks in Yes Bank this morning and certain sections in Yes Bank this morning, which is actually the owner of or the majority owner, SBI is the majority owner of Yes Bank now. And when that blocks in Yes Bank happened, certain sections of the market started talking about, a conversation which may have happened between some big HNI/brokerages with Yes Bank, and that Yes Bank block has been picked up by a clutch of these guys. But today, Yes Bank this afternoon comes out and clarifies that SBI seller in Yes Bank via block, that news is completely incorrect and factually incorrect. Pull up Yes Bank. That's the one to watch out for. 3 days, that's the one which is rallying. Yes Bank, not SBI. So that clarification coming in.
Yeah, so that's an important clarification because for the last 2 to 3 days, Yes Bank has been chugging along very nicely, and then during the day there were these reports that SBI might just sell some stake, but now the clarification coming in that at least for now nothing is on the table and the block deals that happened today aren't on account of SBI selling it out. But Kunal, since you're back with us, talk to us about some of these names which are reacting. You have Just Dial, which is up around 8%, Kalyan Jewelers, a stellar run, and then Trend, of course, caught everyone by surprise.
Well, yeah, definitely. So Just Dial, for example, the stock is still showing signs of a price volume recovery. The breakout has not yet happened for the stock. The breakout in the charts for Just Dial is around the 1160, 1165 mark. This was the high the stock had made in 2021, if I'm not wrong, or mid of 2021. And I think from there on, the stock had been an underperformer. So we'll have to wait out for a bigger breakout point for Just Dial to get into a stronger recovery. Trend, of course, after yesterday's strong short covering move, today's further 7%, 8% uptake for the stock. It now looks like the volumes have changed the texture of the stock completely. So we'll have to wait out for a point when the stock gets into a mild cool off or a mild reversal for someone who's looking to get into a long position. So a 50-day moving average retracement could be a better strategy to buy the stock. But I think today's action is more specific towards the PSU banking major, the likes of SBI, I think Canara Bank, Bank of Baroda, etc. These are the ones which are actually looking very attractive from a trading play.
So that's the take coming in as far as some of these stocks are concerned. But India Energy Week is something which is underway, and we spoke with a whole host of managements there, right from an HPCL, IOCL, BPCL, you name it, and we have spoken to all of them. Listen into the important commentary coming in from all of these at the India Energy Week.
So we are putting up almost like 700 to 800 outlets in this year. We have also added EV at now almost we can boast of 2,500 outlets with EV charging facility. We have added CNG, we have got new GAs into our kitty, and we are working in all the directions. And we are also eyeing major urban markets along with rural markets where there were some white spaces where our presence was not there as per the needs of the customer. So last year has been very exciting, and our plans are to reach out to as many customers and give them good quality product at all times.
Coming on to your overall capacity, give us some details about the capacity addition that you are planning to. Also, any future strategy that you are working on to enhance your marketing going forward, increase your volume going forward.
Yeah, so as marketing, I mean, that's the first motto of any marketing team, to reach out to as many customers as possible and to sell the highest or more volumes with every passing day. Our refineries have upgraded recently. Mumbai refinery upgraded and is already producing fuels at more the nameplate capacity.
GAIL is a joint venture of 4 oil companies holding 12.5% each, and GAIL is one of them. But of this deal, which is for 7.5 million metric tons for 20 years, starting from 28, as against our 12.5% share in PLL, the share in this particular deal is 60%. That is, out of 7.5 million ton of natural gas contract, 4.5 million ton will be off-taken by GAIL. So extremely important deal from GAIL's perspective.
Well, we'll take a very quick break on that note, but get ready for a power pack lineup at the 8th Global Business Summit in New Delhi on February 9th and 10th. More than 2,000 delegates representing diverse industries and sectors from across 20 countries are all set to attend the biggest conclave in the national capital.
Thick and fast. Page Industries came out with numbers. The stock has shot up $700 right now because margins have expanded. So that's the big point. Look at how it's reacting in trade, 2.5% in trade. But let's take the discussion on earnings forward. Ritesh Idnani, MD and CEO of Firstsource Solutions, is now joining us to talk more about the numbers. Ritesh, given your constant currency yearly revenue decline, minor decline, but there is a decline for the 9-month period, your revised guidance now stands at 0.5 to 1.5% constant currency, which implies 5% constant currency for full year. Are you expecting a bumper Q4? Is the guidance a bit on the higher side, optimistic?
I think if you look at the current quarter, right, this has been a pretty strong quarter for us. We had a 3.4% growth in constant currency terms quarter on quarter. And as you might have seen our commentary, we had said that we expect the second half of the year to be stronger after a flattish first half. What you will see, though, when you look at the quarter that went by, which is the third quarter, we had the highest number of deal wins in the last 3 years of the company itself. And we also exited, despite the deal wins, we exited quarter 3 with the highest ever pipeline in the history of the company. Both of these bode well in terms of how we see Q4 also playing out. And which is the reason why what we did is, if you recall, when I joined, I indicated that our growth for FY24 would be 0 to 2%. We narrowed that band from 0 to 2% to 0.5 to 1.5% for the full fiscal itself as we get closer to the end of the financial year.
Okay, so you're sticking to your guidance, but I want to specifically talk about the BFSI segment because after a few quarters, we had seen a bit of a jump in second quarter, but in Q3, it's declined again. How should we read into the demand trends from BFSI?
So I want to start the quarter by talking about one of the things that we highlighted in the quarter that went by. One of our large deal wins in the quarter was with a top 5 bank in the UK, where we won a large transformational deal, and this is one of our existing accounts, which deepens our footprint in that account itself. In addition to that, we've had several deal wins in the BFSI space itself, across the retail banking space, across collections, across the fintech space, as well as with the mortgage business itself. And these have cut across different areas, ranging from customer experience, collections, transaction processing, whether it's on the asset or the liability side, to financial crimes and fraud, all of which are key growth areas in the banking space. So I wouldn't read too much into a minor blip in the quarter itself. If anything else, we feel good about it. It's also reflected in some of the headcount numbers that we've had. As you're aware from the results, we've added close to about 1994 people in the quarter, which is again the highest addition that we've had in the last 3 years in a single quarter itself. We feel good about that in the context of some of the deal wins that we've had in the financial services space.
Right. So lastly, what's the growth outlook then for FY25, and will it be a year of slow recovery or sharp pent-up demand rebound?
I will say this, we see the macro duality still playing out, right? So on one hand, clients remain cautious given the uncertain macro environment, but at the same time, they're also actively moving on programs, where they see the opportunity for cost optimization, not just by leveraging outsourcing and offshoring, but also reimagining the process itself and bringing elements of tech-led transformation, whether it's AI and automation itself. Our opportunity as a firm and as a business is to size that opportunity and continue to engage with them, both our existing clients as well as new logos, with solutions that create value. We think that is creating opportunities for us in the marketplace, given our size and scale, to play on offense. What it's also allowing us to do is to go with solutions which we can be nimble and agile to respond to their requirements. The proof of the pudding, in some senses, I would leave you behind with 3 data points, right? Obviously, the strength of our deal wins is one data point, but the fact that we've now had 2 consecutive quarters of headcount addition, in some sense, is a lead indicator of the strength of our executable order book, despite the macro duality. And the third piece of it is the fact that we've exited the quarter also with the highest pipeline ever in the history of the company. I think these are all lead indicators of how we think FY25 is likely to play out.
Ritesh, on that note, we'll let you go. Thanks so much for making time and speaking with us. But apart from earnings and the Monetary Policy Committee, today another data point which was very important to track was the SIP number that we got. And no surprise, it was another record high, and by quite a bit of distance this time. 18,830 crores kind of inflow that we saw in the month of January, almost 1,000 crore higher than what we had seen in the month gone by, and it just continues to increase. So despite the volatility, and if you look at the performance in the month of January, it wasn't that good for the markets, but it's just that the retail participants continue the confidence.
19,000 crore, we are nudging at 20,000 crore mark. Remember, a week back, one of the fastest growing mutual fund right now on the retail side is Quant. Yeah. Quant founder was on our channel, and he said that whenever there's a big fall in the market, the inflows to the fund goes higher by the 10-day rolling average flows. So now people are buying dips like never before. You know what? HDFC, AMC, Sundaram, then they are internally working with a target of 30 to 35,000 crore kind of a SIP number by 26. Which is not very far away.
What would that spell out for the market?
Not very far away, just 2 to 3 years ahead.
That kind of money waiting. And it's interesting to see that most of its money is still finding its way into mid and small cap schemes.
And big market guys like Mr. Chokhani and many others, Manish Chokhani today also put out a tweet saying the yawning gap between the valuations. So let's see who wins. But yeah, the parts of mid caps are slightly frothy now. But we'll also hear out what Venkat Chalsani, the chief executive of Amphi, they spoke to us earlier after this record number on the SIP front. Let's get his views as well.
There are a lot of positive vibes that are coming out from the economy as you look at be the GDP numbers, be it inflation numbers, be it the results of all the corporates that are coming up, particularly in the banking and financial sector. So these numbers are attracting more and more investors, and at the same time, as you are aware, mutual fund continues to the industry continues to do the investment awareness program, through which one of the most important product that is communicated to all the people is SIPs, and with an objective that it is a long-term investment and not a short-term investment, and therefore we continue to see the numbers in a very positive way towards SIPs. And one important data point that I would like to mention here is that the total AUM under SIPs have crossed 10 lakh crores, which is right now it is 10.27 lakh crores. And also the new SIPs that are registered during the month is around 51 lakh 84,000.
Presenting SBI.
In terms of earnings, and the street was expecting there is going to be an upgrade, but does that happen or not? Let's take it across to the Lupin management. Vinita Gupta, the CEO, Nilesh Gupta, MD, as well as Ramesh Swaminathan, the Executive Director and Chief Financial Officer, are joining us on the show to talk to us about just that. Vinita, let me begin by asking you, the US revenue was well within the guided range. How much was Spiriva's contribution into it? And also, was it just the flu season that really helped the growth, or there is some fundamental recovery at play as well?
Yeah, I'll just add to that given the recent launches, Spiriva in particular, your question around market share ramping up pretty well. We are the last few weeks, our substitution has ramped up to 30% level. So, a very optimistic about the product building both in units as well as revenues in the months and quarters to come. And then added to that, the other product launches, the ophthalmic products. We just launched Prolensa. We have 4 or 5 other ophthalmic product launches over the next 12 months. Injectable product launches starting this quarter. We have 6 injectable product launches. We feel fairly confident of growing our US business into the next fiscal year.
Right. Vinita, just one question. Given the US outlook, would you like to make any changes to the guided dollar revenue run rate of 200 to 215 million?
No, I'd say it'll be $200 million plus. And on a year-over-year basis, we would expect a single-digit growth based on the fact that while we ramp up Spiriva, we are going to see some pressure on products like Suprep that have additional competition coming in. So, we would like to really get to the double-digit growth level, which hopefully can happen with some of the products that we're litigating right now. There are 2 or 3 products, material ones, that are under patent litigation that will give us upside opportunities into next year.
You were just talking about the new launches planned in the US markets. Tell us more on that, and also which therapies exactly will they cater to? How big revenue opportunities do you see from those new launches?
Yeah, so the material ones are products like Mirabegron and Slind, 2 that we are in active litigation actually in the next couple of weeks. So by March, April, we should be in a better position to be able to determine when we can launch them based on the patent litigation outcomes.
Sure, Nilesh, if I can bring you into the conversation, the India business growth was very strong as well. What has changed here, and does this look sustainable?
I think it was under the works for a while. So, I think we're just coming to our own in India, and we would want to replicate this growth. I think it's a function of the investments that we're making in the market. So I think we've added close to 1,300 representatives, 7 divisions that we've added in the last 6 months, in the last 9 months, 21 new products, doing very well on new product introductions as well. But, I think clearly we're, as a strategy, doubling down on India. And we would expect this kind of growth to continue.
Right. Ramesh, your margin guidance was at 20 to 22 odd %. Would you up that now?
No, as you can very well see, pivoting to complex products has really helped us in the US and the EU and the like. And there's, of course, secular growth across various of the markets. Gross margins are up thanks to the sales mix and the like. And of course, our cost-led initiatives are paying off big time for us. But you would also recognize that there are several moving parts, and whilst there are a lot of reasons to be optimistic given our recent trajectory, we would like to take a conservative view. There are positives, as I said, in terms of the portfolio sticking, in terms of the input cost tailwinds, in terms of the IRF productivity, buoyancy across markets and the like. But there are also, negatives in terms of Red Sea-led possible disruptions, freight costs and the like, and so on. So I think, maintaining the levels around the 19.5, 20.5 percentage points would be pretty good at this stage. We'd like to take it on a quarter-on-quarter basis that way.
Right. Ramesh, the net debt has come down. Any plans for to become debt free, or is that the direction you would move into?
As you can see, there's of course accruals to because of the operating profits itself, and we've used that to kind of repay the debts. You would, but having said that, the position right now and the working capital has been optimized tremendously. What used to be about 103, 105 working days has come down to about 96 levels, and this is a huge come down from what it was even a year ago. This optimization is continuing. And all of this actually translates to more cash for potential usage, which you use obviously to repay the debts itself. It's around 1,000 crores is what our debt level right now is, and we would be virtually debt free by the by the end of this quarter or the like. But having said that, it really is a function of, in fact, acquisitions and the like as well. And we are a tremendously acquisitive company, so it really is going to be dependent on that.
Okay, gentlemen and the lady, we let you go on that note. Thanks so much for speaking with us. But the numbers for Zomato are out, and it's a big beat versus the expectation. The profitability has come in at 138 crores versus 67 crore that we were penciling in. So clearly a big beat coming in as far as the profitability is concerned. And the stock is taking its time to kind of show that a jump up. In terms of the total income as well, if I can quickly read that number, it's coming at 3,500 crores in terms of the total income, and that compares to 2,120 in the preceding year. So year on year basis, there has been material jump up in the revenue as well, and quarter on quarter the revenue from operations is 3,300 odd crores versus 2,900 crores. Yes, this was the quarter when there was that festival sales that was expected to kick in, the World Cup sales were expected to kick in, and I think all of that played a factor. But of course the proof of the pudding will really be in the proper report card. What happened to Blinkit, what happened to the turnaround Street was expecting. So all of those factors have to be watched out, but those are the initial numbers.
In fact, my fear is that let's see how the stock actually ends the day.
Yeah.
Because all these bump ups which you're talking about, previous quarter only we started getting a sense that this will not be an average normal quarter. This will be a slightly special quarter. So that bump up explains. And also, if you look at any adjustments, so that is something we'll wait for the the entire sheet to come in, but no doubt about it, it's a wonderful number, much higher than what the street is estimating. And pull up the last 1 month graph. Going into the number, you've seen Zomato add weight. From what, 80, 90 bucks odd, it's gone towards almost 10% this month. Pull up the 3-month chart. So the street was expecting unusually strong number. 20% is what the stock has gained in 3 months going into the number. So it was kind of a delivery. If you see, delivery numbers came out very strong. So, and profit consciousness for all these consumer tech companies are coming back.
Yeah.
But delivery saw profit booking after the numbers. That's why I'm saying let's wait.
Absolutely. Though I don't think the debate, like you're saying, Ajay, was about what the food delivery segment of the business does. I think the more question or the way forward now is for what happens to businesses like Hyperpure, Blinkit. Those are the details that the street is going to now be looking at. But for now, you're seeing a big spike up on the stock. It's shot up to the day's high.
Yeah, the other interesting bit is that the revenue is not that big a beat versus our expectations. So revenue is largely in line, but there's a big beat on the profitability front. Even on the margin front, I don't see that there has been a big improvement. If I have it right, the margin figure is coming at 9.6 versus 9.7%. So we'll have to wait by in terms of where that profit figure is coming in from. Is that the profit from the subsidiaries that have turned around a lot better? Was the ESOP cost something which is lower? So all those workarounds will be there. So just take a minute to kind of understand that, and we'll try and get an analyst as well to talk to us about those numbers. But definitely for now we have the revenues which is coming good, and the profitability is something which is sitting strong. If I can take it across to Naresh to at least quickly get a chart check going on Zomato. It's of course from those 40-50 levels, its turnaround is at 150. But from here on, what are the next levels to watch out for? Kunal, Naresh, both can take it, but let's begin with Naresh.
So we are getting into a band which is very important resistance for Zomato. Post the listing, the stock had made a top around 150, then took a little bit of a dip, and the all-time highs are around 150 to 170 band. So that should be a tough resistance to cross, and the stock has already gone up from 50 to almost closer to 150 now. So out here, this is a good time for the stock to consolidate around this 150, 170 mark and not see a further move in a major way. So time to take some profits off the table and expect some consolidation here.
Zomato for you, 4.5% higher. But I'd also like to go back to HAL, which Aisha had marked about. HAL has done a big tie-up today on the back of which it is gaining for some parts of the aircrafts. with PTC. Both stocks at one point in time were gaining 5% each in trade. Kunal, have you looked at HAL now today and of course PTC Industries?
Well, yes, Ajay, I think HL is a fantastic chart. Every time we feel that the stock seems to have entered into an overbought territory, it consolidates, spends some time in a particular range, and then it manages to continue to move up higher. Same was the case for HL. I think some time back when the stock was trading into a range 2900 acting as a pivot, and 100 point plus minus 2900 was a broad range for HL. In fact, I think just last week or so, the stock also completed a minor retracement as such in terms of the price correction. So this clearly indicates that HAL and the likes are the ones which are riding on a very strong long-term uptrend. So very minor phases of consolidation and minor phases of correction is what one can best get in terms of consolidating or in terms of buying or adding on to the stocks. Now the near-term support for HAL is at 2,900 mark, which was just the previous swing low for the stock over the near term.
Even there was a lot of shorting in ITC today on that bad commentary coming in that they may be looking at monetizing part of stake, almost 4% lower. From 460-70 odd, Nuresh, it has come back to 410, 415. Would you be a buyer if this overhang takes the stock lower? Do you see it go to 380, 390 or around 400?
So technically today is a one-day event, but it has broken an important support level. So for the last 6 to 8 months, 415 to 425 was roughly the support. We've broken that. And the last major price point where you see a support is closer to the 318, 390 band. So closer to that price point is where the risk reward becomes interesting to buy. So for now, would wait for a drift, and if it comes closer to 390, that is the place I would like to buy.
Tracking those numbers from Zomato and seeing the street digest those. So after that 4.5% uptick, immediately the stock has cooled off from there, now holding up 3% as it was going into its numbers. So let me take it across to Vinny and try and understand the numbers a bit better. Vinny, the revenue margins are all in line. Why this big spike up in the PAT?
So absolutely. So what in terms of revenue, we are seeing revenue, yes, in line with what we were expecting, but it's slightly better than what the street was expecting. Profit, a sharp improvement even when we compare it on the ET Now poll versus. So yes, profits came in at 138 crore. This we are comparing on a quarter-on-quarter basis versus a profit of just 36 crores is what we are watching out for. Quick commerce, yes, the losses come in at 56 crores versus a loss of 94 crores. So narrowing in terms of quick commerce, that's the Blinkit business in terms of the loss over there. And in terms of revenue, we are seeing a growth in that front as well. The revenue growth, revenue for quick commerce is at 644 crores versus last quarter 505 crores. Other than that, when you're looking at it, the adjusted EBITDA, what is the number we were waiting out for? That's just come in terms of the press release. That's come in at 125 crores, while our expectation for adjusted EBITDA was at around 93 crores. So it seems like the adjusted EBITDA figure which we are calculating, that is also what better than we were expecting as well. So yes, that's the figure that's coming in terms of adjusted EBITDA as well. Other than that, let me just look at in terms of the other businesses. Hyperpure business has seen a good growth as well. And even in terms of the food delivery business has been better growth in terms of what we were expecting. So yes, better growth in food delivery. Quick commerce revenue growth has been better. Profits are above. But yes, in terms of narrowing of the losses is what we're keeping an eye out on. And adjusted EBITDA surely has given it a thumbs up. We'll be waiting out in terms of, whether to meet the guidance is something we're watching out for. Yes, so companies also saying in terms of the press release that they are on track to meet their guidance. This is for that quick commerce business which they're given for the EBITDA level, adjusted EBITDA level, Q1 FY25. They're maintaining in that guidance. So yes, maybe by the next couple of quarters, we'll be seeing a break even coming in on that front as well.
This letter is out and the company is saying that we expect the top line to continue growing at 50% plus on a YOY basis. At least is what they're saying at this point of time. They're expecting more market share gains as well, revival in the macro consumer demand, and they're expecting both margin expansion and GOV expansion to drive further improvement in absolute profits. Losses will decline and they're on track to achieve the guidance of adjusted EBITDA break-even on or before Q1 of FY25. But Aisha, we have Karan also joining in the show to talk to us about these earnings.
Right, Karan, what do you make? What's your first take on Zomato? Clearly above expectations?
Yeah, I think strong set of numbers. I think in the food delivery side, it was very much expected that they will do a growth of more than about 25 odd %. we have seen the positive impact of festive and of the Cricket World Cup in this quarter. And if you look at the performance of the large QSR chains, I think Zomato has been the biggest beneficiary here of the World Cup, because the environment in terms of demand for the food sector has been quite volatile. Most QSR companies have reported an SSG decline on a heavy base of last year. And so I think clearly Zomato has been the biggest beneficiary versus the QSR chains. And this is not only growth, it also comes at an improvement in terms of profitability as well. EBITDA as a percentage of GOV has grown towards about 3%, and it's a matter of time, a few quarters, that they will come to their guidance of 4 to 5% EBITDA as a percentage of GOV as far as the food business is concerned.
So the numbers merit a re-rating in the stock as well, Karan. Would you up your price target?
I think we have price target of 150. Potentially, in terms of numbers, we had already factored in the growth as far as the food business is concerned. Because going ahead, we don't see this kind of growth on a sustainable basis. I think 20% GOV growth is what could be sustainable, which is largely priced into our estimates. I think the delta will be in terms of the profitability, because I think the pace of growth in terms of contribution margin and both EBITDA for the food business, that has come quite sharply. And there are 2-3 levers for that as well. One very big lever is the platform fee, which they have increased over a period of time. And in the month of January, again, they've increased the platform fee to 4 rupees, in a phased manner. So that is kind of driving, the better profitability. And second is also the advertising revenue broadly, which is also a potential lever apart from the increase in commission rates. So I'm saying that a mix of both revenue and profitability for the food business, but the valuations of the food business are quite at a premium. So the bigger delta in terms of re-rating or an up move in terms of target price will come from Blinkit, because I think that is a business which is growing at a very fast pace, and potentially the break even, if it happens in the next 2 quarters, that will provide us more visibility in terms of where this business could be headed in the next 2 to 3 years. So I think net-net, the re-rating will be driven more by Blinkit, than by the food business, because the numbers are largely priced in. And lastly, I think they've also upped their guidance. I think they had mentioned about some 40% consolidated revenue growth for about 8 quarters. Now that stands to be at about 50-odd%. So definitely there is confidence, to grow at a faster pace as compared to what it was about 6 months ago.
Current point taken, but as you pointed out, it will be about Blinkit and other businesses. For another stock has taken a bit of a U-turn. Let's pull up the intraday chart to show that reaction as well. It started off well, it saw a big spike, and now it's seeing a sudden drop down as well. So we'll analyze that more, but time now to slip into a very short break.
Rashi Peripherals Limited, one of the fastest growing national distribution partner for global.
More importantly, I just want to bring up Zomato, because you just had the company declare its numbers. The numbers are a beat when it comes to PAT, in line for margins as well as the top line. And more importantly, the commentary across the break-even on Blinkit seems pretty much at par for the course. But then again, you're seeing quite a reverse reaction actually come in for Zomato. The stock has toppled from the day's highs, but still going strong for a Trend, for a HAL, IOC, Cummins. These are all names which are going very strong. SBI, even though it's come off from the top of the day, still good by about almost 5% as we speak. And then, of course, there are dots of green on an ONGC, Reliance, BPCL is still holding up. Power Grid is looking very strong. So these are some of the other movers in trade. But Sharad is here to tell us what's happening with HEG and the other graphite stocks. Let's hear out what's the cover that he's picking up. Sharad?
Yes, in focus we are having graphite electrode makers, HEG and Graphite, and what we are hearing from the dealers is the buying is coming in from a couple of domestic institutions. And also if you look at the delivery itself, it has been coming strong over the last 3 to 4 trading sessions. If you look at the overall delivery volumes, Graphite India, it's coming at 35%, while the weekly average, that's coming in at almost 26%, and almost the same numbers we are seeing for HEG as well. Now, both the companies are expected to come out with their strong Q3 numbers as well, and dividend announcement is also expected. Brokerages are all expecting that there would be a rise in the demand when it comes to the electrodes. And importantly, the key DI is already invested in HEG. They have the names of Quant Mutual Fund, and recently the company did announce a 200 crore overseas expansion. And all the DIs already invested in Graphite. They also include Quant Mutual Fund as well as Tata Mutual Fund and DSP Mutual Fund. So DI buying is being seen for these two stocks.
Thanks, Sharad, for that. But it's a sharp sell-off when it comes to the Bank Nifty. That index is down a solid 800 points as we speak. From the highs of the day, that's down almost 900 points. So a big correction as far as the Bank Nifty is concerned. And the culprits continue to be the large private banking names. So a Kotak, an ICICI, Axis, HDFC. These are the names which are under pressure. If I can go across to Kunal on the private banking names in the Bank Nifty itself. Kunal, for the longest time, Bank Nifty has, underperformed. We were very close to that 46,000 mark, but we have completely reversed from there.
Well, yes, Anisha, and I think that's the biggest problem with the market trends as such, because, in the last 1 month, I think specifically from mid of January is, I think, where the Bank Nifty had started to show signs of weakness. That was on the back of, the sharp correction which started off from HDFC Bank. And then it got trickled to the other private sector banking names like IndusInd Bank, Axis, etc. Now, the bigger concern for Bank Nifty is the Bank Nifty is now on the verge of breaking below the 200-day moving average. Now, historically, we've seen that whenever stocks as well as big indices break below their long-term moving averages and sustain by a margin of, say, 1 or 2 percentage points lower, below the long-term moving averages, the trends for these stocks as well as these asset classes and these indices, they weaken significantly. So Bank Nifty is on the verge of, doing that. So we'll have to wait out for maybe one more day of confirmation. 44,850 approximately is where the 200 DMA is for the Bank Nifty on the spot levels. We are still above the 45,000 mark by a margin of 200 points. But I think if we break below this 44,800 mark on the Bank Nifty on the downside, we could be expecting more selling pressure coming into the Bank Nifty.
Nuresh, any of the private banking names that you would like to initiate fresh shorts on?
So I would wait out again another day to see a follow-up action, because the ones which we look the most weakest are the ones which are nearing multi-month lows. So if you look at HDFC Bank, the stock has multi-month lows around 1300 to 1350 levels. So you don't want to short it. The risk reward is not great. If you look at Kotak Mahindra Bank, which has been the weakest, 1650, 1700 has been the low for the last 3 years. So the only one where maybe say something could continue further is say maybe a IndusInd Bank, which if it breaks 1450, that could be a one which could actually see much larger fall. But as of now, would wait for a day and see price action.
Our research team is helpfully pointing out that important bit on Amboro Hospital, because the pharmacy business was a key monitorable for the market, and it seems like it's broken even at the EBITDA level. It's a quarter ahead of the management guidance itself, and that's the reason that stock is reacting positively. In the last few minutes as well, we are seeing that bit of a spike on Apollo Hospitals, and overall the numbers were largely in line, so there wasn't any disappointment as such, and this comes in as a bit of a sweetener that the pharmacy business has actually managed to break even a quarter ahead of the management guidance. But time now to take those BTST trades. Nuresh, you go first.
So would go with two names which have hit new highs today and continue to show the resilience. First is the buy on Dr. Reddy's, holding on well, stop loss at 61.30, target price of 62.50. Second is the buy on Container Corporation, a new all-time high here, good strong momentum, stop loss at 948, target price of 975.
Right. Kunal, what about your BTST ideas?
I'll go with a sell on Bajaj Finserv. That's a stock which is now nearing the break of its 200 moving average. So would expect further weakness if the stock confirms a break below its 200 EMA. So sell with a target of 1530, stop loss at 1600. And Infosys remains to be a resilient stock. In fact, many of the IT stocks are a lot more resilient today, large cap IT names specifically. So Infosys is something which I would suggest as a buy, targets of 1750, stop loss at 1675.
Okay, so an interesting buy coming in on Infosys, but for the markets, we are closing in way off the highs of the trading session. It was all about the Monetary Policy Committee meeting today and the kind of commentary that came out. It was a bit more dovish, but the market would have wanted to hear a lot more on the liquidity side. Paytm was, of course, one issue that they addressed time and again, but that stock actually tumbled after their commentary because they called it a case where they were given a lot of chance and opportunity to improve and comply, but there was persistent in non-compliance. That's what the governor's language was, and that's the reason that stock continues to reel under pressure. Banking space, that was, of course, one of the biggest drags in the markets today. So, Kotak Mahindra Bank, Axis Bank, ICICI, these were your top laggards. On the gaining side, however, there was some sort of support coming in from Reliance. In fact, that stock is ending with a gain of 1% in the last half an hour or so. That stock has managed to chug along nicely. nicely. SBI, you can't forget to mention that 4% gain is very important and instrumental for the market today. TCS, Power Grid, BPCL were some of the other names from the frontline index that deserve mention. From the broader markets, of course, Paytm on the downside is something that you need to watch out for, and so is the case of UCO Bank, IOB, JK Paper. Some of these names are, of course, retracement of the big move that we saw yesterday and result reactions. On the gaining side, GIC RE is up around 10%, New India Assurance is up 11%, Bharat Dynamics, HAL, PTC Industries, all of these stocks are firing away. Cummins India, good result and then getting a thumbs up from the street. Trend on the second day on the trot, it's higher by around 6 to 7%. Z Entertainment, LIC ahead of its earnings is up 6%. And then you saw big deals happening on Kalyan Jewellers and Mankind. Both of those stocks were in focus, and then Zomato as well, which of course reacted a bit volatile to its earnings.
Yeah. Britannia, though, has been quite the curious case because yesterday after its numbers, it's jumped up about 3.5%. Today, it's fallen 5% in trade. There's RT Industries, Metropolis, Canfin Homes, Muthoot Finance. These are all the laggards in trade. Of course, there's not just Britannia, but Nestle as well, which was a loser. And most of these auto names, M&M, Maruti, Eicher, they also took a bit of a step back. But that's pretty much it on this edition of Closing Trades. Thanks for watching.